Now let us look at how to calculate cost of sales using a periodic inventory system. Firstly, you take an opening balance of inventory. With an opening balance, it's found in your trail balance. So, some activities or exam question papers, they separate between the opening balance and the closing balance in terms of dates. You will find a balance that will be written maybe, let's say, for the yes, you'll find an opening balance written a date. You'll have an where you'd say inventory, then they'll give you a date. Maybe they'll say 1 March 2021. Then the closing balance of the same inventory, they will say, maybe they will write closing stock or trading stock or inventory, then they will write date in bracket where they will say 28 February 2022. So by those dates, you are able to determine the opening balance and the closing balance, or you are able to differentiate or to distinguish between an opening balance and a closing balance. So from that opening balance, you add your purchases, you add goods, or you add inventory that was bought during the year. Then you also add your carriages in. Sometimes you add, it depends on which method you use. Some, they will add the purchases net of returns or net of creditors allowances or purchases returns. The answer will still be the same. It depends on the method that you are using. Then you add custom duties or import duties. With carriages in, okay, from your opening balance of inventory, you add your purchases. Your purchases, some they will add purchases net of purchases returns or net of creditors allowances, but some they will add purchases account. So remember, we are using a periodic inventory systems. You cannot say you are adding trading stock, you are adding inventory, but you are adding purchases because trading stock is treated as an expense account. Then you add carriages in. With carriages in, we are looking at cost that we incurred as an entity buying buying goods and allowing a supplier to deliver those goods in our premises. So for that transportation, we call it carriages in because it's goods delivered from the supplier to us. That account is called carriages in, and this account should always be added on the value of your cost of sales, because basically this cost cannot be avoided if you want to bring that particular trading stock into our premises. So these costs are called costs that are directly attributable in bringing this trading stock to us. Then you add custom or import duties. Some goods are bought from other countries or foreign countries. So those goods, whenever they enter our country, they will need to be cleared for customs and import duties. Those custom or import duties cannot be avoided if we need this particular trading stock. Therefore, custom and import duties are also a directly attributable cost in making sure that we have these goods within our premises. Then we less purchases returns. Purchases returns, we are looking at a situation where a wrong order was delivered by a supplier to us, or a supplier delivered goods that are or goods that have defects, or goods that are of poor quality, damaged goods. Those goods will need to be returned back to the supplier. We less that amount of money because we are saying here above add purchases, but if there are returns, we need to less these returns so that we only calculate, or we only add cost of goods that were bought, excluding goods that were returned back. So here again, with purchases, returns, or creditors allowances, it's just the use of different kind of terminology, but it means one and the same thing. Purchases, returns, some question papers or activities, they will call it creditors allowances. Then you less or you minus a closing balance of inventory to determine cost of sales, to determine the inventory that we had during the year and the inventory that we purchased minus the inventory that we have as a closing balance. The difference will be inventory, or it will be trading stock that have been sold. And this is the end, and we have come to an end of our lesson. Don't forget to like our account and click on that notification bell